Hello traders, this video is about how to enter the third Elliott wave. Okay, how can you enter the third Elliott wave? Okay, this is the Walt Disney stock, the Walt Disney stock. Okay, Epic DIS. Okay, Delta India Sierra. Okay, Epic DIS Walt Disney. Okay, this is the stock of Walt Disney. It closed on Friday at 37.05. That's the closing price for the Walt Disney on this Friday, 17th of December 2010. And the Walt Disney stock is at the beginning of the third Elliott wave. Why? If you want to know more about the Elliott wave theory, if you want to master the subject of Elliott wave, if you want to start trading like professional trader, you need to go to www.24elliottwave.com to learn once and for all the subject of Elliott wave, and also you can count the wave like professional traders. Okay, let's start this video right now, and we'll see where is the third Elliott wave. Okay, so I'll do my drawing here on this chart. As you can see, right here the price went down. Okay, the price was in this kind of consolidation zone. You see this kind of buy here. Okay, take profit here, sell here, take profit here. Okay, buy here, take profit here. Okay, sell here, take profit here, buy here, take profit here. That's what was going on in this consolidation zone, what we call a low volatility period, a quiet market period in this zone here. And then suddenly, boom, the price went out of the consolidation zone. That's the beginning of the first Elliott wave. The same story over and over. This is about the psychology of the market, because what usually happens, you can see that the price went down very fast down to this level here. So after this fast downtrend, the bear start asking question that is this thing going to go further down? Okay, and the bulls start thinking that no, this thing went too far so far. We can try to buy now. So we get into this fight between the bulls and the bear. And understanding the consolidation period, okay, is that what usually happens, why we have a consolidation period, usually you will see that is because a higher time frame is moving in one particular direction, when a particular intermediate or lower time frame is moving in the opposite direction. When you see the higher time frame and the intermediate or the medium term time frame get into conflict, you will see this kind of a consolidation period. Apart from that, that's also create this kind of low volatility, which means some people are buying, some people are selling. So we have two opposing force. We have people buying at the bottom here, people selling at the top here, until the price will break out of the consolidation zone. Why the price is going up? Because the reason is that the higher time frame commands the lower time frame. So the people on the lower time frame at the end of the day will lose because of the consolidation period. This usually happen. You will see sometime when the weekly chart will give a clear-cut buy signal and the daily chart will give a sell signal. And then you see people that always will use the daily chart will be busy selling, when the weekly chart will be people, the smart traders that look on the weekly chart, see a clear-cut valid buying signal, will start buying. So during that time, these people were the people on the daily chart are selling down. Okay, they are the one that on this side selling. Okay, and the people on the weekly chart start buying. So anytime they bring it down to this level, okay, the smart money just buying it. Okay, buying it in a small portion. While this was happening, okay, at the time that all this consolidation was going on, okay, the smart money was loading it. This is an accumulation period. But it's only at this point that people realize that in fact the price is about to go up. This is what usually happens. So you will see the higher time frame can be either a monthly and a weekly can be in conflict, and you have a consolidation, okay? Or you can see also the weekly and the daily be in conflict, okay? These are different subjects regarding some of the TSTW that we have. That is about timing your entry point. So I'm not going to go too deeply about this consolidation situation. And also you have to understand that the price went down very fast. So the market was full of one particular group. Well, this is the thing. So we have the bear that dominate the market. So the bull step aside, the bear dominate the market. Okay, even when one particular group dominate the market and move the market in one particular direction for a bit of time, we have this kind of consolidation, because they start, if there's no more no more participation in the direction of the trend, the trend cannot continue. Okay, so because at the beginning of the trend you see a huge volume. Okay, that's what usually happens. You see a huge volume at the beginning of the trend, and then the volume will be light during the trend. Okay, so people bought it, people sell it at the beginning of the trend. In this case, people sell it at the beginning of the trend, and that's it. And the trend will just keep going down, going down, going down. And because there is a capitulation of the bull step aside and say, now this stock, you cannot buy it right now. But when it reaches a support level, the bull will start thinking that, okay, we may give a try and start buying now. And this is what's happened. So in this particular zone, they see it went up, came back again at this point here, touched the same level. The bull start asking questions that these people are not serious about pushing the price further down this level, and they start buying here, and the bears start to push it down, and the bulls are coming into the market more and more. The bull coming into the market more and more, and they push it down. And also, like I said before, it can be a conflict between one higher time frame and the lower time frame. As a TSTW24 trader, we know clearly that according to the market stable data, the higher time frame by all means will command the lower time frame. We do not, it's completely wrong to make your trading decision on one single time frame. It's completely wrong. You must use one higher time frame combined with one lower time frame. There is also a kind of relationship between a daily chart and one particular time frame. All the time frame have a link between them. Okay, there's a harmonious link with the lower time frame and the higher time frame. That's why you have to know exactly which time frame to use for your entry point, which time frame connect with the daily chart, which time frame connect with the weekly chart, which time frame connect with the monthly chart, which time frame connect with the quarterly chart, which time frame connect to the half year time frame, which time frame connect with the yearly time frame, and so on and so on. There is a harmony in the market, and the market will follow that at all times. This is about the consolidation period. Even though this video is not about the consolidation period, this video is about how to enter the third Elliott wave. Okay, I think it's important that I mention this to you now, that you may be aware of it, so that you can also use it in your trading. Okay, we will start now counting finally the waves. Okay, sorry about my blah 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 blah. Okay, so the after the consolidation zone here, we see right here, exactly here, the first wave has started. Okay, so I will draw the first wave for you. Okay, make it a bit thick move. Okay, from here you can see it went all the way to this level here. Okay, now some people may say that the first wave has stopped here. Okay, and then they would say then they would say the second wave down to here. Okay, but I'll prefer to this level here. This is a technical analysis. Okay, any trader can do whatever they want to do. Okay, so right here, my second wave from here, bear with me. Okay, to this level here, that's my second wave from here to this level here. And now we are at the beginning of we are in the zone of the third wave. We are waiting for the third wave to start. Okay, this is it. Okay, so this stock of Walt Disney is at the beginning of the third Elliott wave. Okay, so after a nice consolidation that has started since May 2010 up to October 2010, so we have June, July, August, September. Okay, that's a 4-month consolidation. Excellent, big, a long time for this consolidation, a solid foundation. The consolidation is a kind of a foundation for the beginning of a new trend. When we see a consolidation before the first wave, it's showing that the market has built a strong foundation. There was a long debate, a long fight between the bulls and the bear, and finally a new trend is established. The longer the consolidation, the stronger is the uptrend in most cases, depending also looking at the the balance sheet of the particular stock, whether they have enough cash flow, whether they can meet their short-term debt commitment, whether they create excellent product, whether they're coming up with excellent service, whether they are competing very well with their competitor, whether the sector is flourishing, whether the leaders in the market are not dominating the little one in the group. This is all the thing you have to pay attention to anytime you want to enter the third Elliott wave. The first thing that you need to check is the market direction, because you want to enter the third Elliott wave that is going in the same direction with the market. Sometimes you will see the S&P 500 at the beginning of the third Elliott wave. This is the best time to run around, be busy looking for all the stocks that are at the beginning of the Elliott wave, because when the market starts moving, starting the third Elliott wave, you will see straight away that these stocks that are also at the beginning of the third Elliott wave will move in harmony with the market. And also you will pay attention if you see like you are in a sector of tech and you see like Apple stock, the Apple stock at the beginning of the third Elliott wave, and you see Google also at the beginning of the third Elliott wave. You go around and look in that sector all the stock that are also at the beginning of Elliott wave, because you know that when the leaders of that particular group start moving, they will move everybody together with them. So either you are trading in the direction with the market, or at least with the direction of the leaders of that particular sector. Very important. You do not just go and trade one particular stock in the void. If you're going to trade a stock that is going to go contra trend to the market, you must go to Google Finance to read about that particular stock, the news that are coming, whether they're coming up with some excellent product, whether there is something special with that company, whether they are coming with some innovation, that you may see whether they can go alone in the opposite direction to the market, because sometimes some stock have a valid reason to go completely in the opposite direction to the general market. So this is a contra trend move to the general market. But in general view, if you want to swing trade, if you want to day trade, you are trading first the market, then you are trading the sector, and then you pay attention to the leaders in the market, and also very important, the season in which you are in, especially those who are trading commodity, those who are trading stock that are seasonal, like airlines company. We know that there are some seasons that they have a very bad time, so you have to see also the season of the year that you are trying to enter the third Elliott wave, because it's a bullish season. For everything in the stock market, there is a season, there is a time for everything. This is about timing your trade accurately and to enter the trade at the right time. This video is about how to enter the third Elliott wave. In this particular case, as you can see, the price pulled back here at the end of the second wave. The second wave should not cancel the first wave exactly there. Some people may say it's all the way here, because this is a bit of exaggeration here. That's why I did not take that, but you can see the price close exactly there, where I stopped my second wave. Some people may draw it all the way here. I refuse to do that, because it's a bit of exaggeration. Okay, I don't want to put that into my estimation, so I prefer this session here. Okay, and then the price now is staggering here, beginning of the third wave, bit of hesitation here, which is a bit of consolidation here. We will monitor carefully this zone here because of the resistance here. If you look on your left hand side where I'm moving my cursor, because of the resistance here, that's why the price is having a bit of trouble here. But as you can see, people sold it exactly there at where the price has displayed a double top pattern, but the price went down a little bit here to display the second wave, but couldn't go further down. But at this point here, as you can see, the price tried to go a little bit further down. As you can see, there were buyers here. You see this candle here is telling us that there are buyers in this zone. Okay, so it betrays a little bit what is going on at this level here. So people bought it here, they push it back up to this level here. The price retraced to go down. It couldn't go reach this zone anymore. It couldn't touch this zone anymore, and the price come back above here. There is a bit of pressure here. Some people selling, some people buying. You may check the higher time frame and the lower time frame to see whether there are some conflict between the daily chart and the weekly chart, and then from there you will know exactly who is going to win, and then you monitor this zone carefully. The best thing to do if you are a conservative trader is to wait for the price to cross this resistance level before considering your entry. Usually, some of the smart money will place their stop loss above this resistance level straight away, but we do not trade that way. We, as a TSTW24 trader, we have our filter to confirm to us that this pullback here is healthy or not. If the TSTW24 confirm to us that this pullback is healthy, we will enter right there in order to participate in the direction of the third Elliott wave. You must also pay attention to the volume. You pay attention to the volume in this session here to know whether there are interest to buy in this particular zone, because the setup is one thing, but also the interest is another thing. So you see the setup, you check if there are traders that are interested to participate in the direction of this particular stock. You check the market, you check the sector, you check the news regarding this particular stock. You go on Google's Finance to check the balance sheet of this particular stock. You check the news regarding this particular stock, and then you compare that to the S&P 500, the Euro USD, the Dow Jones Index to see exactly what's going on, and the sector in which this stock is in, which is the Dow Jones 30 stock. Okay, I hope you enjoyed this video about how to enter the third Elliott wave, that you will put into practice in order to cream the market consistently. If you want to know more about the Elliott wave and how to count the Elliott wave in order to participate consistently in the third Elliott wave, you need to go to www.digit4elliottwave.com, www.24elliottwave in plural.com, in order to learn once and for all the subject of Elliott wave, a very simple subject that many people consider as a very complicated subject. But I disagree completely that this subject is a complicated subject, but in fact it's a very simple subject. If you want to join us and also become a TSTW24 trader, you need to go to www.stochastic-macd.com and get your TSTW24 trading system. The price for the TSTW24 trading system is £80. 80 sterling pound, 80 sterling pound, average up to conversion to the dollar, that's $124 only that you will pay. I hope you will become a TSTW24 trader, and also that you will can communicate with us fluently, so that together we can cream the market consistently. Until the next time, enjoy yourself and be very happy. Thank you much.